Good day. My name is Lara Smith. I'm the CEO of Molten Metals Corp. We are working on various antimony mines with the aim of getting them into production and becoming a meaningful player in this market.
Lara, lovely to have you on the show. First time we've met or spoken, and we love a news story. Can we? I guess there's so many places to start with a news story, but let's start with antimony. What is it? What's it used for? What's the market look like?
Well, antimony is one of the oldest metals known to man, first discovered in ancient Egypt and used by the apothecaries. Today, about 57% of that is used as a flame retardant. And because of that property of, I suppose, heat retardation is what you can call it, it's got applications for mass batteries and scalability. Because the one issue which you have in scaling up these batteries, if you kind of think about it, it was all about portable devices. So we're going, how do we get a big Sony Walkman down to an AirPod? That was the original. Now we're on the other side of how do we go from an AirPod to an electric vehicle, which has got a lot, and then to a stationary battery, which is a mass battery for storing energy and feeding it to the grid. The problem with all these metals is as you scale up a highly reactive metal, you start to generate more and more heat. So you need something that insulates it, brings it down, reduces the specific heat capacity. And one metal that has been identified for this is antimony.
Is that the problem that you set out? We've seen all these sort of Teslas and others setting a light whilst driving along the road. Is that what kind of was a spark for this idea for you?
No, look, I mean, the spark is I've been a mining analyst since I was 24 years old, actually. So critical metals is my thing. I always say, you eat with bulk metals, you eat with gold, iron ore, and coal. But if you want to enjoy yourself, then look at the minor metals because they're interesting. Antimony is one of those sort of niche metals. It's 170,000 tons in the market. So you can very quickly become a meaningful player. And it's highly critical. So that's what we were looking for. In terms of exploration, I mean, I'm not a geologist. I'm generally somebody, and I suppose my personality as well, that gets involved later stage. So from pre-feasibility, feasibility onwards, and I really enjoy the production side, if I'm honest. And antimony mines in particular are small by definition because you don't have these massive mines left anymore. If you did, it wouldn't be that critical of a metal, and quick to put into production. So there's historic resources, historic information. There's a lot of information that informs a mine plan, and you can really see the end game. And that's what I really enjoy. So when I look for a project, I don't look for very, very early stage. I look for something that can actually produce cash flows in the next while.
Right. Okay. But you're kind of at the very, very beginning stages of this. And I think, do you know what would be useful? Can you actually describe the business plan for this company? I kind of get the market overview as you've outlined there, but how are you going to go about inserting yourself into this space?
So at the moment, we've got 4 projects. They're at different stages, and there's different information known about each one. I suppose the most interesting and the most developed one is a project called Crux, which is in Slovakia. So at the moment, we're concentrated in Europe and Canada. Crux is potentially one of the world's largest untapped antimony mines. And when Slovakia used to be part of the USSR, what they used to do is build these adits, which are like long tunnels, and so mine on the seam of those tunnels, and they would calculate or estimate the resource as they went along. So what you have are these very, very detailed maps, if you were, of what the resource is, what the metallurgy is, and the adit that has been built. So you stare down a tunnel which looks like a mine has been built for you. And this particular adit is in perfect condition. Somebody sent me a music video the other day before we owned the mine, obviously a couple of years ago. A couple of kids ran up and down this adit making a music video in it. So you can see just how much of a perfect condition it is. I mean, the rail track is still there. The iron beams are still there. It takes away the need to drill a lot. It also takes away the need to build a lot. So what you really want to do in the scenario is you want to confirm that resource, and you want to confirm it well, so it gives you a measure of confidence. And with that, you can start to apply for a mining license. What they call in Slovakia, it's different to Canada and elsewhere, is that you get a conditional mining license. And the conditions are that you meet a feasibility study, and often it will call for a separate EIA, or that EIA will be incorporated in some way, but you'll need a base line. So that's where we are with that particular opportunity. And the reason for the raise, which we're doing now, is we've approached DMT Engineering, which is a German engineering company, very well known as one of the oldest engineering firms in the world, been around since the 1700s, so that's a fun fact. And we've asked them their approach. They have suggested that we look at what's been done and actually do a PEA. A PEA is not required in terms of getting a mining license, but it's good mining practice, and it's good for confirming and getting confidence around what was done, because what was done in the 1990s and 1980s. So that's what we're doing. And following positive results there, we will immediately go for a resource and a mining license.
Right. I guess the PA is also a way of you informing the market what the economics could look like, because it's, as I say, it's quite old data, and it's kind of hard to people to kind of judge these things. Is that you mentioned? I think you've got like 3 projects in Slovakia and 1 in Canada.
Yeah.
So is that the kind of, I guess, the flagship project, or are the others that you said they're varying stages of development?
There are various stages. So, I mean, just looking at Slovakia specifically, the first project which we actually received and therefore started working on is a project called Tinnansgrund, which is in the east of the country. So if anyone knows Slovakia, you fly into Končice. It's about a 40-minute drive from the airport there. That is a very large concession. It's got smaller adits on it. One of those adits are mined out. So that is actually a very good sign, because I suppose what makes antimony difficult is not all antimony is upgradable and not all antimony is usable. So the fact that it was used is a very good indication of the type of ore that is there. There's another 2 smaller adits there where a resource has been calculated. And then there's a huge concession where there has not been any resource calculation. So it presents quite a large opportunity for us and quite a bit of upside for the region if we start. But again, that's going to take more drilling, more effort, more calculation. The good thing is in the east of the country, there's a strong labor force because there's also very strong unemployment. So, there's always these pros and cons to evaluating any project. So, one's good on the other side, you get a strong labor force. So it depends on what you want and how you decide to proceed. Pretty near there, so about 15 kilometers drive. If you're heading west, there's a tin asset. And the tin asset is pretty similar. It's got adits there. It's been drilled down to 2 levels. There's a historic resource on that particular mine. The adit is in pretty good condition, and it hasn't been drilled further. So we don't know if those veins continue down. So, when we looked at these projects, we're trying to go, what is the low-hanging fruit? How do we get this into, because the aim is production. We're not going to go for a development company and then try sell it to a major. We want to be meaningful players. So we're looking at it with that lens, really.
So that's interesting to me, because I think, when I ask you about the model, it seems to be you find assets. Okay, we know about the asset class. Okay, we're tin, antimony, and gold, which we haven't mentioned so far. And we've got a historic data. We've got perhaps historic production as well. so the view for you is, no, we're going to actually get these back into production, or get all of these into production, build our own plant processing, etc. That's the end game for you. Really
Yeah.
clear about that.
Yeah.
Okay. No, it's just that, you know what I mean, and you as an analyst will know this. You know, lots of companies talk a good game because it's part of their negotiation strategy whilst they're going through development, but then hand it over to someone else's balance sheet to deal with. I see what you're doing. So, how so far when you're sort of talking to the market, and even with this, I guess, non-broker product placement that you're doing, is there a kind of pushback on the Slovakia component, or is that very much viewed as being able to bolt into the European ecosystem for electric vehicles and wider?
No, it's actually been very well received by the European Investment Bank and various groups as well, the EBRD, that are specifically looking to develop not only Europe, but Eastern Europe as well, and the former Soviet Union blocks, which are, I guess, the poorer parts or the less developed parts of Europe. So there's been a lot of support so far, what we've seen. There's very good academics and very good people on the ground there. We've got one consultant, Ferrabecos. He's been very good on antimony. He's based there. He's helped us get those projects, bring those projects. The university there is very good at the processing of antimony. They understand that body well. So it's been, I'd say there's been a lot of positivity around developing those projects, particularly in the area. It's also a legacy thing, because a lot of these antimony assets are, antimony in particular, but I mean tin, and it's true for other heavy metals, is that there's a lot of heavy metal that has been left, especially by the USSR, which mined without too much of a care for the environmental considerations. So to some extent, bringing those mines back into production can actually act as environmental cleanup at the same time, because, you know, we will be responsible. We'll put the tailings underground. We'll treat the tailings. We'll make sure we're not polluting the groundwater. We'll get a base. So it starts to actually make that agricultural land better if you actually have activity there rather than just letting it go. So from that point of view as well, it fits in with the whole European model of responsible mining, development, and being environmentally sound.
Right, and let's talk about where you are now. I hear what you're saying with regards to the green component. We'll call it. There's lots of areas we can go there, and perhaps we will if we talk again. Is you with these assets that you've picked up? And we haven't even talked about Canada yet, which again, antimony and gold, is a lot of, I guess, a lot of desktop research and reinterpreting of existing data. Then going back in, and as you say, that perhaps will be some drilling, but it's kind of limited. Is it confirmatory type of drilling that you're talking about?
Yeah.
Okay. So you're trying to kind of build a picture, paint this picture, to I guess allow for, in terms of later financing, the financings that you'll need in the next stages to get to be able to kind of say, look, here's what we know, here's how we're going to come at it. Here are the processes. So I get the plan that you're doing, but for now, for the here and now, how long is this process going to take? You're raising a little bit of money at the moment, and it is just a little bit of money. Where's that going to take you through to, and what does it tell you, or what is it going to allow you to tell the market, more importantly?
Yeah. So we're raising $500,000 Canadian dollars. That will allow us to work on Craiova. So it will allow us to digitize the core and to produce a PEA on Craiova. So it will give us some ideas of the economics, some basic resource, not to an NI 43-101 standard, but that's what it will do, and it will pay for other operating costs, test work, head office expenses, and so forth. So it is a little bit of money, but we've worked really well together. Then we would need to do another raise, and that raise will be to do an NI 43-101 or JORC, or calculate a resource for Craiova.
Right. Okay. So that's and what's the time frame for that? For both those
phases?
So
the PEA the maximum time the PEA can take is about 6 months, I would say. Okay. And then from there we would need to raise. The next raise will come in at 1.2 to 1.4 million to work on the resource, and then some head office expenses again.
Right. Okay. And so you must know. I know you can't make announcements until you've kind of got or be able to announce a resource. You can't obviously talk about the economics until you've done a PEA. But you must know now enough to give you confidence that this thing will be able to produce economically. Because I don't know. Obviously, with I think did you say that which was the project which was a few kilometers away?
Is what Triova is the one we're looking at. Triova is in the west of the country.
Triova, yeah, okay. Yeah, no, but I meant, you said there was another project which was quite close by.
No, so in the east of the country, there's Tenensgrund, and that's an antimony gold asset. And then pretty close to that is a tin asset. And then in the west of the country, which is what we're concentrating.
Got it, okay. So how do you? Because you've got to. You talk about getting into production. You're going to have to be really efficient with it, right? You don't want to be building multiple plants across Slovakia. Have you sort of? Do you have a basic understanding of the size of Triova today and whether the economics could stack up? You must internally have just thought about this and got a plan for how you actually get the processing plant, etc., done.
Yeah, remember that we're dealing with a small market. It's 170,000 tons. So that market is worth about $2 billion. Okay. For Triova, the historic Russian resource that was calculated, so I'm not announcing a resource or saying this is true or anything like that, but the data which we have available suggests that on a contained metal basis, there's 46,000 tons. And on an ore basis, there's about 832,000. Now, if we can come close to that, then I would say a priori it's economic, and your aim should then be to start to try and produce between 2,500 to 5,000 a year on a contained metal basis, and where we would approach it is that you wouldn't try and necessarily, you can't produce metal, for instance. The metal's got to be roasted. You can't roast in Europe. But what you need to try and do is, it's a trade-off between the percentage of the concentrate that you produce and the pay. So if I want to go for 70% concentrate, then I'm going to get less material and it's going to cost me more, but I'm going to get paid more. So that becomes your calculation and how you optimize your revenues, and therefore how you optimize your plant.
Right. Okay. And in the meantime, in terms of that kind of, because again, no one wants to kind of fork out capex too quickly on all this. You obviously signed a deal recently with Scandinavian Steel AB, which is a good start. So how do you, when you started from a lower position like this, how do you kind of manage that kind of the cash flow to kind of get into production? And how do you manage the cash flow after you may start to be able to do, I don't know, DSO or whatever your plan is with Scandinavian Steel?
You use development capital. Most of these smaller projects which are on a critical metal list, if you have the mining license and it can show the ore body and show the business case, you take development capital so you don't dilute your shareholders.
Okay, and you're talking about the likes of EBRD, European Bank of Reconstruction and Development, that sort of?
You could take, so they might get involved in development capital, private individuals, or even trading companies. So basically what you would want, and I'm talking about an ideal world because we're not there yet, but when you develop a mine, what you would really want is development capital against production. So it's paid with offtake. And that's how it's debt, but it's allowing you to produce and to set up your capex.
Right, interesting.
So
okay.
That's how you do it.
And so we should kind of go touch upon Canada if you don't mind. So I can skip past that. Okay, West Gore, antimony and gold again. You know what you're doing there. Next steps, PEA. Is that right?
Well, even before the PEA, so West Gore was Canada's foremost antimony mine. We know that it produced during World War I. and it stopped production. The legend has it, the story has it, it stopped production because it was carrying uninsured cargo to the war effort and got sunk by a U-boat, and that sunk the company. So we've got every reason to believe that there is still ore there. And there's two phases to this. There's the underground mine, which has never been mined on an industrial scale. They've always taken material from the outcrop. And then there's tailings and stockpiles, which has been left there. So the low-hanging fruit on West Gore, before you start, jumping into PEA, is to auger those stockpiles and dumps and see if we can process that. Because you're dealing with like a high-value product. So even if you can get a couple 100 kilograms out, that becomes, it becomes good money, really. And then you can use that money.
So talk to me about how you think people should view this company. I kind of like the model where you're kind of going into old assets and you've got a bit of data and you're just going to do confirmatory type exercises. The leap through to production, it feels like a big one, but is it? Do you have a confidence that you can get to that point? And in which case, how far away is that?
It's not such a leap. The leap is very administrative. So, the leap is you've got to get your resource statement, you've got to get your mining license, you've got to do your PFS, you've got to wait until the committee sits and decides. And if you miss that decision because you're late on the PFS, you've got to wait again. Yeah, so it's an admin process. It's not a challenge. Where does your challenge comes in? Your challenge comes in. So the processing of antimony ore is very simple as well. You use very straightforward dense media separation, flotation, that kind of thing. But your next challenge, if you will, is to try and optimize your revenues. Do I want to produce 40% concentrate, take a lower payable, but it costs me less in capex, but it gets me to production quicker? Do I want to get 70%? Then I can start selling to the automobile industry. But I'm going to get less ore, and it's going to cost me more in capex, but I'm going to get a higher revenue. So these are the challenges which you have as a producer. But getting there is a money exercise and an administrative exercise. And the hardest part about the hardest monetary exercise is now. It's before PEA, because once you pass that and you have and especially if you have a resource, then you've got money. There is money available for critical metals. So this is the hardest part.
Right. In which case, tell me a little bit about your background relative to what you're trying to do now. Maybe some of I know John Harris from Bankers Petroleum days, but Hugh and Joel and the rest of the team. Who have you brought together to deliver this?
Yeah. Okay. So I'll introduce the rest of my team. So Joel Montgomery, he's an engineer, process engineer. He's also the CEO of SPMP, which is the largest antimony roaster outside of China. I can also credit him as being the man that put that asset into profitability. So he's done very, very well there at SPMP. John Harris, he's a chemical process engineer. He's also mainly on commissioning small-scale projects. And this is really, it's a small-scale project. It's an industrial level, and there's a lot of upside to it. But we're not commissioning Barrick Mine. We're commissioning something of a small niche market. So John's very experienced at that. Simon Hobson as well is a mining engineer, so he's very adept at drawing up the mine plan. Not on the board as Ferris Bakos, but he's a local consultant and exploration geologist, very instrumental getting things done in Slovakia, speaks the language. And is involved in several antimony projects. Hugh Oswald is in Canada. He's been involved in several. He's a 20-year career and 30-year career in Canada. He's been involved in several junior mines. He knows how it works administratively. He knows how to raise capital there. On the IR side, he's also worked with critical metals. So he's an asset as well. And then myself, I've run Core Consultants since 2009. Most of my work is, I'm known best as an analyst. So the majority of my work is on pre-feasibility studies, feasibility studies, and valuations of mining opportunities. I come from a finance and a chemistry background. And more recently, in the last five years or so, I've been involved in trading and brokering commodities, including antimony. So I do know the market and I do know the players. And so that's the background and the team there, which is a very strong team.
Okay, so tell me this then. As a former analyst, consultant, looking at the marketplace, what were the most, and especially around the feasibility stages as well, looking at that, what are the most common mistakes that companies make along that journey? I mean, what are the things that you're very conscious of getting right for what you were doing here?
Some of the mistakes which you don't know until you actually do the work is things like, you'll take a historic resource, even like this USSR resource, and you say, okay, this is what was done. But what they didn't take into account is how thick are the seams. So, and that makes a difference between, do you produce 46,000 tons of contained metal, or is it only 40,000? That starts to make a difference. The other thing where people, I suppose, and this actually happens a lot in critical metal projects, and I probably wouldn't have this appreciation for it if I wasn't on the other side trying to trade these metals, is they look at the price of dysprosium, or they look at the price of lithium, and they think that's the price. And actually, that's not the price. And even if you take in like the impurities, it's not the price. For instance, if you're going to trade rare earths, a lot of refiners and roasters only pay on the heavy rare earths, so the dysprosium, the neodymiums, the praseodymiums, and pay 1/100th of the price. And now you've got to mine that. That is not a lot of money when you are a mine. The money is made on more downstream in that particular. So a lot of analysts get it wrong. They get it wrong on the processing side, and they get it wrong on the pricing side. And that filters into a feasibility study. So when you start now going into your NPV and you think your NPV is X, it's not. So that's the one thing. The other thing is that, there's this saying, especially at those junior markets, where it's explored at depth and opened at depth, and I don't know what other verbiage is used. It's 100, they want 100 ounces and they want 10-year life of mine. No, you don't. You want to mine this thing as quickly as possible and capture the market. And you want to walk away with your $500 million, having invested for 4 years and $10 million. That's what you want. You don't want this thing to extend for 10, 15 life of mine. You want to retire. So that's how you want to move to the next project and get the next opportunity. So I think the way of thinking about some of these projects are probably not 100% correct when you actually start on the commercial side of it. And it's a big difference between exploration and production, and mining between the two. And that's where I think we get it wrong as analysts, we get it wrong as investors. You're looking for these buzzwords that just are not practical.
I couldn't agree more with what you just said. It's when we do our analysis, companies don't like it and some shareholders don't like it, but the reality, commercial means commercial. Commercial means making money. And sometimes the word commercial is used to infer that they should be able to make money, but they don't. Well, look, Lara, fascinating conversation. I like I said, I like the model, and I like the kind of commercial awareness of and the commercial imperative of how you kind of move through the phases here. So I do appreciate you coming on, telling us this story. We will definitely keep an eye on you, and do come back on and let us know how you're getting on as you move through these phases. Thank you for your time.
Thank you very much, Matthew. Thank you.